Well, hi guys. I hope everyone is fine. It's Timmy Dollar speaking. Um, Remember to subscribe so that you don't miss out on the new content that I post. Um, Also share to your friends because the things that I share, I'm going to be sharing here. They are the things that they charge them, and even most mentors don't even know these things. That is the fact. Okay, so share to your friends. You can share to them so that they can also be able to learn like you guys. So what we are going to cover today, we are still on market structure, but then we need to look at how we can enter the market. Yes, using market structure, how you can enter the market. I forgot to tell you guys, we also offer signals, and also mentorship is available. For signals, we do $20 per month. You can WhatsApp me on 0755 17 97 13. Okay, let's continue. So we looked at market structure. Let's do a recap. We looked at market structure. We looked at three markets. We have a market breaking highs, and then also we had bearish market breaking lows. Okay. And then we also had a ranging market that is not going anywhere. And then we also covered major structure and internal structure, whereby we told you between a swing low and a swing high, we have internal structure. Then the market comes to create a swing low, then market continues to go and create a swing high. So these are swing points of the market. Yeah. So when we get this internal shift, when the market is going up and we get this internal shift, it means that the market is going to retrace. And then when the market, how do you know the retracement is done? When we get another internal shift to the upside. That's how we can know that the market is going to go to the upside. So internal structure helps us to predict the retracements and the end of the retracement. Then now today I want us to cover on the two waves of market structure, because I told you market can do this and this, or this and this. So we want to cover we want to look at the two waves. Now we are going deep. The two waves, we have the market creating an impulsive move and a correction. Impulsive move and a correction. So the two waves. This is an impulsive wave, and this is the correction wave. So for you to trade the impulsive wave, you need to take advantage of the retracement. Okay, that's why I like retracement so much. When I look at the market and it is retracing, I know there's an opportunity that is about to present itself, because I like trading in the direction of the market, like trading this impulsive move, because these are the moves that have a lot of money. For example, you can take like 2-3 trades using these moves, and then you can hit your target, weekly target, daily target, and whatsoever. Okay, first of all, you need to understand which wave are you in. After understanding the bullish market structure, also understanding the bearish market structure, and also understanding the ranging market, you need to understand, when you open up that chart, you need to find out which wave are you in. Okay, so are you within the impulsive move? Because most of you people take buys, but you know the market is within an impulsive wave. Anytime the market can retrace. For you to take buys, you need to wait for the retracement move. This is the wave that gives you a clear trade So in order for you to take the money move, which is the buy, because this is the one that is going to make you money and more money. So today I'm going to share a simple strategy on how you can be part of the impulsive move. You can also trade the retracement, but I will not advise you to trade the retracement. I want you to trade the money move, the move that is going to make you money. Okay? Remember, before you open that buy or sell, make sure it is worth it. Okay? Don't just open up trades. When you open a buy or sell, make sure it is worth it. Okay? That's why I want to take trades that are going to make you money, not trades that are going to just move a bit and then continue. I want you to trade in the direction of the market. Okay, so let's talk a little bit about now. Let me show you something here crazy. When the market is going up, let me do this. The market is going up. Wait. Fuck. Forgive me. I think we shall continue like that. When the market is going up, let me use this. Okay. When the market is going up, okay, let's try to lose small ones. The market is going up. This is impulsive move, correction, impulsive move, correction, impulsive move, correction, impulsive move, correction, impulsive move, correction. Now look at this. Market breaks that low. Okay, remember the market was doing impulsive move, correction, impulsive move, correction, impulsive move, correction. Now we have an impulsive move followed by an impulsive move. That is the first indication that the market is going to reverse. But we don't enter the market, because if we enter at this point, we are going to have a drawdown. Okay? Remember, for us to take the direction of the market, you need to wait for a retracement. We had an impulsive move followed by an impulsive move. So we need a retracement in order for us to look for entries in this direction. I think we are together. And an impulsive move follows an impulsive move. That is the first indication that you are going to you are going to reverse market reversal. But we don't just enter the market. We enter the market on retracements. For us to take the trade in this direction, we need to get a retracement, and then we need to identify the end of this retracement to take trades in this direction of the market. That is very powerful, but you need to rewatch the video and over and over again for you to understand these things. You cannot understand them by just watching the video once. Okay. So rewatch and watch and watch and watch. Okay. That was what I was looking for. I told you passive move, correction, passive move, correction, passive move, and an impulsive move. Okay. Most of you making the mistake of entering when the market has, it's a reversal because now the market has broken this low. But the market has to reverse. And we need to identify the end of this retracement in order for us to take trades, sales in this direction of the market. And then we can hold for as long as that trend is alive. Let us look at downtrend. Market is doing this. Market comes, and that is the first sign of a reversal, but it is not how we enter the market. We need a retracement. Remember, when trading the impulsive moves, we enter on retracements. Okay, We need to identify how this retracement is going to end for us to take direction in this, take a trade in this direction, like that. These are very powerful concepts that can change your whole trading career. Okay, so today I'm going to give you a very simple but powerful entry model. Okay, first of all, you need to identify which wave you're in. I would recommend you to be like to take advantage of the retracements. Okay, now we have a market going to the downside, then it retraces with this wave. Yeah, first sign, the bias, we know the market is going to the downside. The second, we know the market is retracement, it's just breathing. We know that the next move is to the downside. But what is our entry trigger? We are going to use a trend line. Now, when the market is it is retracing, it will respect a certain trend line. It will create liquidity. This is called trend line liquidity. The market will continue creating trend line liquidity within the opposite direction. As it is creating this trend line liquidity, it is taking out this buy side liquidity. So our first entry trigger is going to be when the market starts to take out this other liquidity. Okay, this is going to be our first entry trigger before even market structure shifts. What they will do is they will first take out the liquidity. So our first entry trigger is going to be on this breakout of this trend line. Enter your trades, the sells, put your stops above, and then we're expecting the next impulsive move to the downside. It's a very simple but very powerful entry model that no one has ever talked about on YouTube. First of all, you need to identify the market structure. The market is going to the downside. That's the first thing that you have to note. Okay, because it is breaking lows. Now, you have opened the chart and the market is retracing. Which is, you say now, wow, I'm going to take advantage of the next impulsive move, which is the sell trade. And I told you, as it is retracing, it will create certain liquidity as it is taking out liquidity. Because the market does two things. It takes out liquidity as it is creating liquidity. Okay? That's what the market does, always. It takes out liquidity as it is creating liquidity. In this case, you have the trend line liquidity over there. Okay? So when the market starts taking out the trend line liquidity, that's our first sign that the market is going to sell. And that's when we enter our trades. Our stops are put above. And then we ride and make money. You just need you cannot fail to get a trade every day. Trust me. If those mentors of yours that tell you that smart, don't trade on Mondays, smart what? I wonder, because the market will retrace. The market will retrace, or will either be in a retracement or in an impulsive move, and it does that every day. So how are you going to convince me that there's no trade? Come on. Me, every time I open a chart, I see trades. Just that I have to discipline myself on a number of trades that I have to take, and when I hit my targets, I stop trading. Okay. So let's look at a buy model. We have opened up a chart. Market is breaking highs. That's our bias, that the market is buying. Okay. And the market will not just buy. You will not just be in an impulsive phase. You will have to do a correction phase. We need to identify that correction trade phase as a retracement. Okay. We need to identify the retracement phase. Okay. Sorry about that. you need to identify the retracement phase. Okay, that is when we open. That's when we identify the liquidity. Next, market takes out the liquidity. Market starts going to the the other direction. I hope that one is clear. Okay, it's very simple but very powerful. Very powerful. I've not told you to draw any other block. I've not told you to draw anything. Identify market structure. 1. Identify which wave of the market you're in. 2. And then for the entry, identify the type of liquidity the market is creating, because when it is retracing, it will create that trend line liquidity to respect something as it is taking out something. When the market starts taking out the trend line liquidity, that's when you can enter the market. Let's look at the chart. Let's look at the chart. Let's look at the chart. Okay. Let me look at the daily. Let me look at something that is no, let's look at V75S, V75S, V75S. So let's form. First of all, what is the market doing? You're now getting a bias. Market is breaking lows, breaking lows, breaking lows. Okay, before that low was broken. We want to see how we would have taken that sell to the downside. Next, we need to identify our retracement. Next thing, we need to identify our liquidity. What was the market doing? It was respecting this trend line. It was respecting this trend line. Okay. I thought it respects something as it is taking out something. Oh, this is buy side liquidity that the market was taking out. So when the trend line is violated, we now have the direction and entry trigger. Where is your entry? Right here. Enter there. Stop loss above here, and boom, you make money. Simple. You make money. Simple. Re-entries. Most of you, I don't know what you guys. Market is breaking lows. Re-entries. Look. Re-entry. Another entry. Another entry. See. First entry 1, 2, 3, 4, 5. 5 entries. Just one trade. You don't need a lot of trades to make money. You can get like your 3 good trades and you make money. How are you going to tell me that there are no entries, you man? Okay, let's try to look at your so-called boom and crash, because they tell you that these things can't be traded. Smaya what? Okay, they tell you that these things can't be traded. Let's look at what was happening today in lower time frames. M15. Okay, M5. Okay, market was breaking highs. That's our bias. Market is breaking highs. Market is going to the upside. Okay, next we need a retracement wave. we got the retracement wave over here. And what is happening? The market bought after taking it out that trend line liquidity. Market bought. That's a lot of money. If you know how to utilize full margin trading. If I was risking an $100 account here, I would make a lot of money just of that move. There's no way you can tell me there's no trade. It's impossible that there's no trade. Come on. You can use this thing in any time frame. You can go on M1, you can scalp, you can what? Okay? You just have to go and make money. Just have to go and make money. Since my network is fucking up. But I hope you've understood this entry model. And I know it's going to change a lot of people's lives. Okay? There's more to come. Subscribe, like, share, comment, do all the needful. And I'll give you the knowledge that you're looking for. I'll give you the knowledge that you're looking for. Look at all these sales that the market was giving to you. Because now the first thing is to identify the bias. Market is breaking lows. Next thing is identifying the retracement wave. It's going the lower time frame. Retracement wave. Market was retracing here. Market was retracing here. Retracement wave. Next thing is drawing that liquidity. Market takes out the liquidity, showing you direction, and you take the trade. Stop loss above. Trend line liquidity. Another sell. Liquidity. When they start grabbing that liquidity in that direction, we know they are going to sell. Let's see. Me guys, I told you every time I look at the chart I see entries. So I want to train you to see the same things. Look. And you're going to tell me that there's no money in the market or there are no entries. How can you spend a week without opening a trade? When you start taking out that general liquidity, you sell. Simple. Don't want this video to be long, but subscribe, like and comment, share. Let your people who are losing money in the market watch this video, and I know they will become profitable. Remember, it's just the beginning. There's more to come.